when the price came down from that intraday peak of 2040 in August of 2020 and was trading around 1780, 1820, you saw a lot of central banks buying gold. It wasn't China and it wasn't Russia.
All right, well, let's talk about central bank buying now, and then we'll close out the conversation there. You wrote in a note to me, more countries bought more gold at higher prices in 2021. China and Russia, the big buyers from 2008 through 2019, did not buy. Other countries bought. So let's recap what happened there. So the two large buyers, China and Russia, abstained from purchasing gold in large amounts in recent years. Why is that?
Well, for different reasons. First off, Russia has 74 million ounces of gold. It was spending last year really building up dollar reserves and foreign currency reserves in advance of its plans to attack Ukraine. But it does have about 20% of its monetary reserves in gold, about 74 million ounces. And it pulled back. It actually started to pull back in 2020 when the oil price collapsed, because oil and gas exports are their major source of revenue for the country, foreign exchange coming in, and also government revenues, both from taxes of the oil and gas industry and from other duties and fees that they collect for the exports. So when the oil and gas prices fell in the early stages of the lockdown and pandemic, that really hit the Russian economy, and it also hit the Russian government's treasury. So they've stopped buying for all intents and purposes in early 2020, and they haven't come back. China also has a lot of gold, about 63 million ounces at this point. It's about 3% of their monetary reserves. They're quite content. Most central banks are very price sensitive. And in the past, what you saw, and you can look at a price chart, like for example, in our gold yearbook next week, we have a chart of central bank gold buying. When individual private investors push the price up, central banks pull back. When investors pull back from buying as much gold and the price subsides, central banks come in and buy on the dips. So you saw, for example, central banks buying a lot of gold when the price was weaker in 2018 and 2019, investors weren't buying. When investors came in and bought twice as much gold in 2020 as they had in the previous years, and they shot the price up, central banks pulled back. When the price came down from that intraday peak of 2040 in August of 2020 and was trading around 1780, 1820, you saw a lot of central banks buying gold. It wasn't China and it wasn't Russia. It was a lot of central banks that you don't necessarily see as, or haven't necessarily seen as gold buyers, but they were coming in there. So you had 4 central banks buying, each of them bought more than 2 million ounces of gold last year. You had 2 other central banks that bought nearly 1 million ounces of gold, and you had more than a dozen other central banks that were in there buying smaller amounts of gold. And they were buying around $1,800. Now, these guys are price sensitive. They were buying at $1,250, $1,300. When the price rose, they stopped buying. When the price came down, they started buying again, but they started buying around $1,800. Central bankers buy gold as a monetary reserve, not as an investment. So they have an open-ended holding period. And what the central bank community was telling the gold market last year was, we used to think that $1,200 or $1,300 was a cheap price for gold. Now we think it's $1,800. I mean, that's an incredibly bullish message. Central banks have said, no, we think gold prices are going higher, and $1,800 is a bargain price to buy.
So generally then, would you say that central bank buying activity would be a good leading indicator for the price going higher?
Traditionally, I don't think that it has. Central banks buying obviously has a positive influence, and they're big ticket items.
Well, not so much that they're an influence on the price. You have explained that retail investors collectively are more of an important investment demand driver. I'm just saying that central banks, being as price sensitive as they are, maybe they've got some smart analysts working for them, and they know that prices are going to go up soon, so they're buying now.
They get good advice, I will say that. But yeah, they had good advice and they're very level-headed. And like I said, they tend to be bargain hunters. They're not necessarily short-term investors. A sovereign wealth fund or an institutional investor might say, I'm buying gold with 3 to 5 year time horizon. A central bank says, I'm buying gold with no time horizon. I'm buying gold as a monetary reserve asset that I'm going to add to my monetary reserves and basically leave it there until I need it for an emergency. Like if I attack a neighbor and everybody freezes my foreign exchange reserves, I might have to sell some of my gold in order to pay for imports. That's the way central bankers look at their gold. And so they do have an influence on the price. The collective influence of central bank buying and selling seems to be lower than in terms of percentage influence on the price of gold than the collective influence of retail and private investor buying. But it's still up there. It's number 2 after investment demand in terms of influences on determining the price direction of gold.
Okay, Russia. People want to know what the Russians are gonna do now that they've invaded Ukraine. Again, one of the largest gold reserves in the world. What's your take?
Well, they do have 74 million ounces of gold. They have about 400. At the end of January, they had about $470 billion in foreign exchange reserves. About 200 billion of that has been frozen as part of the sanctions once they started the war. Another big chunk, perhaps as much as 200 billion, was held in yuan at the People's Bank of China. And Russia, a couple of weeks ago, said to the People's Bank of China, hey, we'd like our money back. Can we have it in dollars, by the way, not rubles, but dollars? Or, and the People's Bank of China said, no. There are international sanctions against the Central Bank of Russia now. And while we don't have sanctions against trading with you, we don't want to run afoul of those international sanctions. So we're not giving you your money back. So Russia had a war chest of $470 billion in foreign exchange, most of which is tied up and frozen now and will be frozen for a long time to come because it may well be used to pay reparations and reconstructions after the war with Ukraine is over. So they have reduced amount of foreign exchange reserves to pay for imports. They have reduced for foreign currencies coming in because of sanctions on oil and gas exports to the United States and a couple other countries. Right. They need money. They have 74 million ounces of gold. That gold is stored in Moscow as opposed to offshore. So it's available to them. So they may well have to sell some gold in order to have currencies for imports.
That's right. They may have to sell it, especially to finance this war. But could they, is the question. I'm reading this article from Bloomberg. This is not exactly new news. It came out a few days ago. U.S. targets Russia's giant stash of gold in new sanctions. I'm just going to read the first 2 paragraphs. The U.S. Treasury issued a notice that gold transactions with Russia are prohibited, citing executive orders signed by President Joe Biden. The directive is the first time the agency has made it clear to the gold market to stop dealing with sanctioned Russian entities. Russia has spent years building the 5th biggest stash of gold in the world, and it's being targeted now because sales of it could shore up the ruble, which has plunged as global economies isolate Russia following the invasion of Ukraine. So the U.S. is sanctioning Russian gold sales. Is that going to be successful?
It will be partially successful. There are any number of entities that will not trade gold with the Central Bank of Russia. And, even before you make the sanctions on gold, you had sanctions on the Central Bank of Russia. So that effectively precluded trading business if you want to follow the rules. There will always be bullion trading companies and entities that are willing to skirt sanctions. There will always be central banks and other governments that are willing to skirt the sanctions. So it's something of a barrier for the Russian government to sell some of its gold, but it's not necessarily a completely impervious barrier.
Well, let's assume that the barrier is not an issue and they do successfully sell some of their gold to finance their activities. Would that significantly impact the price of gold? Russians unloading their gold?
Probably not, because whoever buys it probably, would not necessarily have been buying that in the open market, and B, probably would not be selling it in the open market. If someone says, I will buy your gold nefariously and I will trickle it into the market so that I have currencies that I can either remit to you or that I can keep myself, then it would have a negative effect. But there's a good chance that whoever would be buying it would probably say, I'm just going to sit on it. Now, let me amplify that. A central bank that might be doing this might say, this is a way to pick up gold at a discount. So I'm going to do it and I'm going to keep the gold and it has no effect on the price. Somebody like a bullion trading company or a company that has the wherewithal to buy and sell precious metals might say, okay, I can buy this gold. I'm going to charge you a discount because I'm breaking the law, I'm taking risks, et cetera, et cetera. You're a pariah state. I'm going to buy the gold. I'm going to pay you a discounted price for gold, and I can turn around and trickle it into the market at the market price and make a nice spread between what I'm paying you for your gold and what I'm selling it for in the market. So in that kind of environment, you could see it having a price effect. But I think that that's a less likely thing that would happen. I think the more likely channel would be that they would sell it to a central bank that wants to add to its gold reserves and is willing to buy gold at a discount.